All right, everyone, welcome to Trade of the Week Mondays, where I go through one setup that has already triggered for the Stats Edge Pro members this week. Talk about what algo it came from, the ideas behind the system itself, kind of what we're looking for, and the rules around how to trade it. So this one actually comes from our breakout system, our trend following system. So the last one came from a mean reverting system, and I'll talk a little bit about that and how that one went. This one came from a trend following system. So a couple things to note between the difference right away. So this is the equity curve. You can see the return year over year. These are all the yearly returns going back 25 years. All of the rules behind it here. Again, this is all on statsedgetrading.com if you want to check that out. It's all there for you guys to read completely for free and a little video explaining the algorithm. But a couple things to note. So last time we looked at a mean reversion system. Mean reversion, you're trying to be quick because you're fighting the trend, but what you're looking to do is find something that's a little bit overextended from the mean, hopefully in a long-term chart. You're looking to buy it, you're looking to take your money, you're looking to go on to other things. Trend following is a little bit different, where you're trying to find almost the diamond in the rough, right? So you're looking for something that is going to break out and trend for a long period of time. Now, the problem with that is we obviously never know which one's going to trend. And it's going to take us a while to figure out if this is going to be a trending name. So you have to have a little bit more patience when it comes to mean reverting setups. Like with Jeff, we were in and out in a week. This one, we're looking to hold multiple weeks. The average winner to this one is in the months. It's measured in the months instead of in the days, and the average loser is still like 2 months. So we won't know on average whether we're right or not for a long time. But what happens is if you end up cutting the ones that aren't working quickly, keeping the ones that are working, then you get these massive moves in some of the names, and eventually you look down, you just see that you have a portfolio of stocks that are in nice trends and they're doing good work for you. So quickly just summarize Jeff, right? Jeff was, we were looking to buy on a daily chart right down at this level. We snagged that. We got in a little bit late. I got in a little bit late personally just because I wanted some confirmation that there was buyers there. And then we bounced and we were out Monday morning. So just a quick little, dollar 50 hit on a trade. Completely different what we're trying to do with ACIW, which if we look at this, the weekly chart, you can see this one's been trending for a long time from 21 up to 57. So massive, massive move over years here. It's been a great trend. Then it went into this sideways consolidation for a while. And this is a lot of what the system is looking for. This base that's happening right here after a nice little pullback. Then we had a breakout last week. And one thing I like about it is that breakout happened on earnings, which means all the quant nerds that are looking at this kind of stuff did all their nerd stuff and read the profit and loss and growth rates and all that stuff. And they decided, hey, this is what I'm going to buy. Nice 2 day push up on higher than normal range, higher than normal volume to get us out of that base that we were in for some time. So, what I want to see relatively quickly over the next couple days to weeks, I want to see us break this high and then potentially move higher. That's obviously the ideal. And our stop loss is going to be one of two things. We have a protective stop down here around the $50 area, but we have a stop of the 50-day moving average. So the exit rules on this is a break and a close below the 50-day moving average or a new 20-day low. Now, the idea is that if we are wrong, we're wrong very small. But if we're right, if you look at what this did before above its 50-day moving average, you would have gotten, again, from 20 all the way up here till 50. So that's like a double. So that's what we're looking for. We never know which one's going to work. This has a less than 50-50 win rate, but if we're right, we're going to like it hopefully because it's going to break out. So I really like the look of this one. I just like the strong candle we had last week. That's amongst a bunch of crazy action that we're seeing in the overall market. This one was relatively strong, broke out of a range, nice solid trend. We're just trying to see if we were going to get another leg higher. So if you're interested in trading with an edge like this, that I can show the statistics, right? You can look at them, you know all the rules before you get into it, removing a lot of the guessing. Coming over to statsedgetrading.com and give us a shot.